And with that rockin' tune this morning, welcome to Option Pit. I'm Andrew Giovinazzi, Chief Operating Officer of the Option Pit website, home for options, education, and volatility. Welcome everybody on April 15th, 2015. I believe this is the day we all file our extensions. Anyway, welcome to Option Pit. One of the best deals going is our weekly trading course for April 25th, 3-hour course. Surf over to optionpit.com/events. There is an idea of what the course will be like. We have a Mark's what we'll call our monthly webinars that we do one a month for free. This one, though, we'll get into a lot more detail about trading weekly options, helping people structure weekly trades, trying to find some edge in the weeklies and trying to figure out exactly how they work. All right. It's normally $247 for our Saturday course, just $147. If you join Option Pit Live, you get all the Saturday courses for free. And we usually do about 80 a year, so it's a good deal. If you join Gold, you get all our Gold content, plus Option Pit Live, plus the Saturday courses. So pretty good deals for all that education and learning from Mark and I at OptionPit.com. All right, so let's go to the markets. What do we got? Actually, this is just a little talk we had already in our chat yesterday about Draghi pulling back on. He says, nope, we're buying bonds all year. He is trying to chart the course of stability. With that, we have a little blog from Mark yesterday on this, right? We've had 3 essential crashes. We've had an oil crash. We've had the euro crash since 2008, and we had, well, the euro is, and we had the gold crash. So we had 3 what we'll call 2008 type events. The euro is still midway through theirs. Oil seems to be kind of getting near the end of whatever that run was. Gold has basically hit its bottom. It seems like it's not going down anymore. So that's 2 almost done, and then the euro is probably looks like it's somewhat 2/3 of the way through. But they're committed to buying bonds, and the only thing really changing that tune, at least dollar-wise, is whether we raise in 2015 or not, which it seems like it dips up or down every week, basically. But for right now, stocks like the fact that Intel can make money, Bank of America can make money, all those companies, all those countries. So we see in the chat, we got sidetracked in the chat yesterday. I never got what I wanted done. Typical. However, oil getting a little bounce from a good report on demand. Makes sense, though, that the price gets cut in half and demand goes up. Shock. So, again, we're seeing prices we haven't seen in a while for crude. And it seems like the battle days, or at least the straight down declines, are starting to, at least short term now, are starting to dissipate. So we have a trade on our strategy letter for that. What we do have, though, is there is this what we'll call there's still the Greece issue. There's still volatility in Chinese stocks. China is not growing as much accordingly, but only 7% a year. They might ease, which could cause more upside explosions in equity prices. So there's some volatility factors that are weighing a little negatively. But as of right now, earnings are at least progressing okay in the U.S. They're not the disaster so far that everybody thought. And I guess the little wild card here is the EU is now going to formally charge Google with something, even though you can go just log on and use Bing if you want to. Which is one reason why Europe is still what it is. That's their great idea. Anyway, so as far as vol goes, we're starting to see a couple of trends. One, VIX again moving its way back to 12.5. The range seems to be 12.5, 14.5 lately. Don't see a whole lot of reason for that to be changing. It's premium over parity convergence. What we do have, again, what's starting to build in the futures, it's sort of the same thing we've had, right? Where the April future's gone, I think the settlement was 1384, but that's what it looked like. And we've got, again, $2.25. Still a lot of premium in that. That was $3 last week. We had some nice trades in Option Pit around that, around the futures, around the future premium. If you're not a member, not in the chat, not looking at the strategy letter, then you would not know what those are. But as of right now, the more VIX drops, you should see the futures stop its march here, and the cash will keep kind of sinking a little bit. All right. As far as this, I think again, we still, Mark had a quickie trade ID in CVX yesterday, buying some calls. We could see a little bit of upside blowback. A lot of these names like Rig, a lot of the drillers are starting to break out from their the lows of the stock was around 13.5, starting to come back a little bit. So we might see more of this. So that's the kind of stuff I want to look for today. You still got some pretty high vol. So well, I'm sure we can find some positions that work for that. But as far as the market goes, like any other day, we're trying to get to the all-time highs. And right now, at least it's being propelled by better earnings news, which is a more solid foundation for us going higher. So as usual with this market, getting in the way on the upside while we have interest rates near zero has been a poor idea and continues to be a poor idea. And that's where we'll leave it today. I will see all of you in the chat very soon. Bye-bye.